start with SoFi. It's been a pretty good year for SoFi so far. Stock is up, I think 12, 13% or something like that, outpacing the market. Still a relatively new issue to the public markets, but I know this is a business that you like and you own shares of it, I believe. So talk to us a little bit about the quarter. What stood out to you that made this a good one for SoFi?
Well, it's funny, as you go on in earnings season, like the longer it goes, the more growthier the companies get. You start out with kind of the big banks, then you get into the regional banks, then you get into the fintechs, then you get into the really new fintechs. And that's kind of
like
where
the
we're
grand
at right
finale.
now.
It's like the grand finale of a fireworks show, right? You're always waiting for that big bang.
They save the more exciting ones for last, and that's definitely what we saw here. SoFi, I mean, the numbers look fantastic. The stock reacted appropriately, but 2.9 million members, that's almost double what it had a year ago, 96% year over year growth. It added 377,000 members in the third quarter alone. And if you remember what we said last time we were on the show and talking about SoFi, the key is being able to cross-sell products, because SoFi's average member has something like 1.5 products with the company, maybe like a personal loan, and some might have like a credit card or something like that. So products grew at 108% year over year. So products are growing faster than the member base, which indicates that they are doing a really good job of cross-selling products. And they announced one real interesting tidbit is most of their growth is being fueled by just a few of their products. So they said between SoFi Money, which is kind of the bank account replacement, SoFi Invest, which is their brokerage business, and their new credit card, which is very new and the smallest of those three products I just mentioned, drove 79% of their new membership base between just those three products.
Wow.
And 73% of their cross-selling came from those three products. Financial services products, including those three, grew by 179% year over year.
Wow.
So the core lending business is doing well. They did 3.4 billion in loan volume between home loans, personal loans, and student loans, which, remember, they started as a student loan refinancing company.
Yeah.
But the financial services is the big story here.
It is fascinating to think about how this business has evolved in what seems like a very short amount of time. It's true financials, a holistic solution. It sounds like it's really becoming. We talk a lot about the environment for banks, right? When interest rates start to creep back up, and it feels like we are obviously headed in that direction. The pace, I guess, is yet to be determined. But regardless, how do you feel like, we talk about how banks typically should benefit from those rising rates and being able to generate a little bit more on that net interest income line item there. How does SoFi? Do you feel like it's from those same types of tailwinds, or is it really all about products for this company?
Well, they do. Their lending business is a big portion of it still. I mean, I said $3.4 billion in loan volume. And SoFi's loans are, personal loans are typically in the 6 to 10% interest rate range. These are higher interest loans for the most part. That's where the biggest part of their lending business is. So they do generally benefit when interest rates rise, not like a one-to-one relationship, like a lot of bank loans. But it's definitely a big growth driver if interest rates rise. But right now, the big story there is the growth in products. I mean, if you're growing your bank account customers and your investing customers by 180% year over year, a small interest rate increase is kind of a footnote at that point. But their priority right now is building up the business, and then eventually just sitting and coasting on the interest income and fee income that they're generating. But right now they're in all-out growth mode, so interest rates are more of a secondary concern.